That is probably my favorite change in in the one big beautiful bill.
I know we have some software companies and some MSPs that are doing the cloud computing and involved in some sort of R&D. I know Section 174 has been impacted. That's the right one on R&D, right?
That is, and
Okay.
that is probably my favorite change in in the one big beautiful bill.
Hmm.
We have clients that do research and experimentation. So, pre one big beautiful bill, all R&E had to be capitalized and amortized over 5 or 15 years, depending upon whether it was domestic or foreign. And that was applicable from 2022 forward. The one big beautiful bill actually changed that to where now domestic R&E expenses can be expensed. There was no change to the foreign R&E. So you still have to continue to capitalize and amortize your foreign R&E expenses. And in addition to now deducting R&E,
Hmm.
the benefit for small business, if you have under $31 million of average gross receipts, which most small businesses
Most,
do,
yeah.
then then you potentially could go back and amend your prior year's tax returns and remove the capitalization of the R&E expense. So potentially resulting in refund claims.
Got it.
Uh,
Yeah,
if
I
it,
remember that you had mentioned that they should be reviewing past filings because aren't they allowed to go back a few years if they had, let's say, amortized and be able to fully expense that?
yep, yep. So you could go back to 22. So that was the first year that you were required to
Got it.
capitalize and amortize R&E. So if your capitalization of R&E caused you to be in a taxable income position, you would want to go back and amend those 22, 23 tax returns, remove the unamortized research and experimental
Mhm.
costs, and get refund claims. So
Got it.
if it didn't cause you to be in a taxable income position, or if you're beyond that $31 million small business exception, then your options are to unwind your unamortized R&E expenses over 1 or 2 years. So we're still waiting for guidance from the IRS on exactly how all of that's going to work. But yeah, this was an exciting change for me. I have a lot of clients that have been
Yeah,
capitalizing already, and this was definitely taxpayer favorable.
that's just for R&E based in the United States, right?
That's right. They refer to it as boots on the ground. It has to be in the US.
Got it. So any foreign R&E still amortized over a 15-year period.